Welcome to this conversation where we'll be talking about how to get a loan for your business. My name is Christine Casina, and this conversation is by Kingdom Bank. They have a hub called the Growth Hub, where as a business owner, you can be empowered to take your business to the next level by bringing experts like the one we're about to talk to, as well as comments you share far below, so we can learn from each other. And we have Paul Kameri, a risk analyst and a business advisor. Mr. Kameri, karibu sana.
Asante sana.
When you think about business owners and loans, where do we get it right? Where do we get it wrong?
Okay, fine. When you're a business owner, of course, it means that you have started a business before even you have thought of going to get a loan. You've started a business, you have invested your own money, you have gotten money from parents or whoever it is you have borrowed from, and you have had this idea that you wanted to put in action because it was meeting an unmet need, and there is a demand for the product or service that you are offering. Now, after a certain number of years, basically 3 years, that's when we start to see that this idea is growing and we require more money. And
to take it to another
level. And we cannot wait to pour back money that we are getting from sale. We need much more money to take it to that other next level. That's when we now start preparing to engage a bank to give us a loan. To do that, we have to do, the banks ask many things. There's a lot of data they require. You have to have an accounting system that shows your full accounting statement, financial statements. The banks are they are able to interrogate those financials to see whether you are
you're saying the truth
or you are just a figment of your imagination.
But hold it right there. Is it not possible for us as business people to cook data and show the bank that I'm in good standing?
Some ratios will smoke you out. So some simple accounting ratios will smoke you out. Like because even if you cook data, you don't live in isolation. Your business does not live in isolation. There are few tests that will be run to check on those ratios, and they will smoke you out. And if you really are a serious business person, an entrepreneur, you have no business trying to cook your books. So you have to put documentation in order. You have to get the right feasibility study about your business, your financial statements, your taxation compliances, all that stuff, And I would like to mention here that, and I hope that the audience will hear this, that I fight for the government to support entrepreneurs in this way. Instead of our dependence, especially the small business owners, our dependence on collateral, they should first measure the credibility of the bank by how many people they have employed, of their business, how many people they have employed, how much they have been paying to taxes, NSSF, NHM, for how long, so that they can see that this business is there to stay. It is there for real. It is not something that is started for a special purpose vehicle.
As a business owner, how do I tell that this is the right loan for my business?
That's a very good question to ask. Because I've had instances where I have to explain to the people that before you go to get a loan, business loan, because this is not a personal loan, remember.
It's a business loan.
Informed by data that this loan is required if this business is going to get to the next level.
Yes, and I'm clearly using for ABCD.
Yes, so you have sat down with your team, you have looked at figures, you have looked at projections, you have looked at finances, and you have seen clearly that if you put this amount of money here in the form of a loan, this will be the ripple effect. We'll sell more, we'll make more, we'll be able to pay the bank.
Absolutely.
And make
some money out of it.
Absolutely. So that forms the basis. Before I have had to convince people that people don't just wake up and go to ask for loan in the banks.
Have you ever seen context whereby business owners take more than they need, overborrow a loan, and what kind of repercussions have you seen in such instances?
When you do that, the chickens will come home to roost.
At some point.
At some point, because the business will be unable to pay the oversized loan that you have taken.
Oversized loan, that's the way you put it.
It will be bad, it will be unable, and then now you'll start to have what we call difficult conversations with your bankers.
So what you're trying to tell our business owners is, if you need 500,000, take 500,000.
Yes.
Not just because 1.5 million is available to you, that then you take 1.5 million.
Absolutely. Absolutely. Don't take more than you need.
And on that note, we have to come to the end of this conversation. But as we wrap up, our topic for today was understanding how to get a loan from a bank for your business, or just getting a loan for your business. So the pointers you have shared with us today, number one, that when you're taking a loan, it needs to be need-based. Of course, again, informed by data. And you must never, of course, again, take a loan to finance a lifestyle. And don't take more than you need.
Of course. Literally, don't fake it until you make it. It's disastrous.
All right, as we wrap up this conversation, getting a loan for our businesses, what do we need to do? Point number one.
Of course, we have to have invested in the business ourselves.
It's a viable business.
Yes, for a number of years, we have to have plowed back our profits back to the business to mean we are serious before we go for other people's money. We need also to show that we
invested in the business.
Yeah, we believe in the venture.
And I remember you mentioned possibly from year 3 is when you need to start thinking about taking a loan for your business.
Loan, yes, because many startups, after the third year, maybe I have seen statistics say 70% of startups don't make up after
the third year.
The third year, they don't So the third year is when you really see that you are gaining traction in what you are doing.
Right.
And that's when you can go and confidently say that you need a loan. Then you have the financial statements.
Number 2, get your financial statements in order.
Because that is data in itself that the bank will rely upon to measure your credit worthiness and how much that depending on how much you ask and whether they can give you the full amount that you want.
Absolutely.
Number 3, it has got to be need-based.
Need-based, not emotional.
Not emotional, not fantasy, not wannabe, not fake it until you make it.
Absolutely. Fantastic. And the last one, to mitigate the risk, grow the business beyond?
Outlive you. The business should be able to outlive, because needs will continue there. If you look at the biggest, for a parting shot, the biggest winners in business worldwide, they didn't start in thinking how much money they are going to make. They started on thinking about a need they are solving. So most of us, we need now to start thinking about our ideas vis-a-vis what they are going to solve.
And on that note, I want to thank you for coming through for this conversation. We appreciate you for your expertise and your time. We have surely learned a lot from you.
Thank you, and I'm grateful that to have me here, and I'm humbled.
On that note, we come to the end of this conversation. We were talking about how to get loans for our businesses. I'm sure you've learned something. Let's have a conversation in the comment section. What has been your experience getting a loan for your business? Do you think banks are the best? Do you think circles are the best? Let's see how we can empower each other. And from these conversations, you never know, Kingdom Bank can possibly bring us together so we can see how we can continue to learn from each other, bring experts from home like Mr. Kameri. We can continue to be better and take our businesses to the next level. Thank you so much for watching.